Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, the 26th of March. We've got a slight risk-off feel to markets today, nothing too significant. I mean, in the context of some of the selling pressure that we've seen obviously across the course of the recent weeks, this is fairly small fry. It's just about 2% off on equity markets at the moment. But you've seen that that Wall Street closed 2 sessions higher in a row. Now, that hasn't actually happened pretty much since I think the sell-off began, and it just means that there is an element of sort of improvement in the broad picture. Although as I said, the futures are trading slightly lower today by 1.4%, but again, that's off the lows of the day, so nothing too significant. The dollar correction that we have seen developing in recent days continues. Actually, it's now into its third, or actually fourth session, and continues lower. Now, this comes despite the fact that Treasury yields are basically flat, and I think it's just an element of that dollar unwinding that move. And if you look at swaps prices, for example, they are coming back, so that's helping to alleviate some of that pressure that built up with the dollar strengthening across everything, and that's now unwinding, and that's obviously helping broader risk sentiment. But as I said, today markets are a little bit lower. We had the Senate passing the bill for the massive $2 trillion stimulus package that the US government is putting together. Passed it, so it now goes to the House of Representatives on Friday, and it seems as though that's going to pass as well. But I think that we could see the first indication of how this coronavirus is impacting on the world's biggest economy today. We've got the jobless claims. Now, you can see here that it spiked to, weekly jobless claims last week spiked to 281,000. I've taken this chart back to include the 2008-2009 crash, called crisis. 665,000 jobs, 665,000 weekly jobless claims at the peak of the great financial crisis. Now, today, we're expecting to see over a million. I mean, basically, estimates are all over the shop depending on where you get your estimates from. But according to Reuters, anyway, 1 million is the figure there. But I've seen figures as big as 1.6 million, and you can see here the spread: 250,000 to 4 million, depending on some of the estimates. But I mean, that would obviously 1 million in itself would be just absolutely dwarf the biggest amount of weekly jobless claims that we saw at the height of the crisis. So I think that pretty much puts into perspective what the impact is going to be on the US economy in the coming weeks and months. And so significant job losses and is expected, and just how that those jobless claims come out today could have an impact on market sentiment as the day goes on. Now, broadly speaking, in terms of data points today, we're looking at the Bank of England. Well, actually, first of all, let's have a think. First of all, sorry, it's not that. First of all, we had the UK retail sales out this morning. Now, the ONS in the UK are releasing all the key data early now. So retail sales worse than expected in February, only slightly, and that pulled the year-on-year data back to plus 0.5% growth, but you can imagine that's going to absolutely fall off a cliff in March as the UK has gone into lockdown. The Bank of England at 12 o'clock. Now, I'm not sure what's going on here with Reuters. They've actually posted this, the decision ready, although that's pretty much the expectation. So I don't know exactly what's going on there with Reuters, but yeah, the expectation is at 0.1% on rate, 645 billion on QE, and a unanimous decision. This is not actually. So I don't know what Reuters is doing here, but yeah, it's a unanimous decision to hold rates at that record low of 0.1% on rates. And then further into the afternoon, we've got the final US growth number for Q4 expected to just remain unrevised at 2.1%. But I think jobless claims are going to be the key factor for markets today. So that takes me on to my chart of the day, which is the DAX today. Now, what we've seen is the DAX rallying in recent sessions as the market has really begun to engage some sort of recovery. Whether it's the bottom or not remains to be seen. But how I said in the daily report, how the market responds to this, the first sign of correction will be interesting. Initially, it's actually pretty much off the lows of the day straight away. So that, I think, is fairly encouraging actually for the DAX, considering the fact that we've got momentum indicators which are pulling decisively higher now, and the stochastics on multi-week highs. MACD lines bull cross, RSI back above above 30, but it was above 40 yesterday. So this little correction and how the market responds to it is going to be key. Now you can see on the hourly chart. Well, first of all, 9563 is a 23.6% fib retracement. Holding above that would be encouraging, certainly, and initially we're doing that. But look at this, the hourly chart. You've got 9,200 is a pivot line. Pretty much of a base pattern as well. So holding that base pattern would be encouraging. Yesterday's low was 9469. So again, we're holding on to that. And we're still holding on to the hourly positive configuration on the MACD and the stochastics and the MACD and the RSI specifically. RSI above 40 consistently is a good sign, and MACD consistently above neutral is a good sign. So at the moment, it seems as though that the market is happy to support into weakness today. We are 2% back, but again, I mean, given the magnitude of the swings that we've seen in markets, this is small fry. It's barely even looks like a move on the hourly chart here, given the fact that it's still almost 2% down on the day. It's hardly even scratching the surface, but you can see here that the moving averages are all bottoming out and starting to rise, and the momentum is positive. So it's looking fairly decent still for the DAX on a recovery, and as long as the markets can hold this in the wake of that, what is likely to be a horrendous jobless claims number for the States, then it'll be interesting to see if this can continue to pull higher, because the recovery does look as though it's okay at the moment. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.